In some ways, the sources of capital available to a co-op business are the same as the sources available to other types of businesses. In other ways, the unique structure of co-ops creates some differences. First, the principles of cooperation impact the financial aspects of the business. The important principles to remember when discussing co-op financing are: co-ops are organized to benefit members, not maximize profits. That means that returns on investment, like preferred stock, are limited. That also means that the co-op should be financed by the people who use it. Because the people who use the co-op can and will change over time, the burden of financing the co-op's operation should also change over time with those membership changes. So, where can co-ops find capital to start or operate the business? First, let's think about a new co-op, and then we'll move into thinking about a co-op that's already operating. A new co-op can raise capital from direct investments. These are contributions that give investors an ownership stake in the business. The co-op can use debt financing or obligations that must be repaid. And the co-op can use those other sources of financing, like donations and grants for capital needs. Let's turn first to direct investments. Cooperatives can be organized as stock or non-stock businesses. A stock cooperative sells stock in order to raise equity capital for the business. A co-op can offer one or multiple types of stock that confer different benefits depending on the co-op's capital needs and future expectations. Common stock confers voting rights and ownership in the co-op, and is required to become a member of the co-op. Common stock does not pay a return. Usually, the money raised from the sale of common stock is not a major source of capital for the business. Other types of stock may be offered to create investment opportunities to raise capital. The stock may not confer voting rights and may have different redemption policies than common stock. Preferred stock, which may be offered to both members and non-members to raise capital, does not typically confer voting rights, but it does usually pay a limited dividend. If the co-op were to dissolve, obligations to preferred stockholders are typically paid before all other classes of stock, hence the preferred name. Keep in mind that co-op stock is not typically transferable without the consent or approval of the co-op's board of directors, and that there's not a secondary market for buying and selling co-op stock, like is available for some other types of investor-owned firms. The sale of stock must meet state and federal security regulations, so consulting with professionals about these options is important. In a non-stock cooperative, members are required to pay a membership fee in order to receive voting and ownership rights in the business. There is no formal mechanism, like preferred stock or other classes of stock, to allow non-members to invest in the co-op under this non-stock model. Like the stock co-op model, however, membership in a non-stock co-op is not usually automatically transferable. Transferring membership would likely require approval by the board of directors. Now that we've looked at ways to directly invest in a co-op, let's look at debt capital. Debt financing, or receiving funds that must be repaid to the lender, creates a contractual obligation to return the funds according to the terms of the agreement. Debt financiers could be a bank or institution, a non-traditional lender that can provide assistance in specific cases, like community development financial institution, or member loans. These financiers have repayment priority if the co-op dissolves. Note that member loans may be considered securities, in which case they would have to comply with state and federal securities requirements. It is a good idea to consult a legal professional before starting a member loan campaign for your co-op. Finally, let's look at other sources of capital that the co-op might be able to use for startup or operations. These other sources might include donations from individuals or organizations, potentially even through crowdfunding platforms, particularly if a co-op is serving a social mission. Often groups thinking about forming a new co-op or expanding an existing co-op are curious about grant opportunities from public or private sources. In general, eligibility for grant programs is dependent on the applicant's mission area and business purpose. So it really is a case-by-case basis for understanding whether the grant might be a viable opportunity for a cooperative. The co-op should consider whether they have the capacity to apply for and manage a grant award as part of their capital planning process.